Alrighty, hi folks, I am Becky with Enduring Finances. Welcome back to my channel. Today we are breaking down my entire stock portfolio right now, valued at about $28,900 at the end of the year, so December 31st to January 1st of 2023, right there in that cutoff, just so you can see what I am dealing with and what I'm working with. As far as context wise, if this is your first time in my channel, welcome. I'm happy to have you. Hopefully you can glean some knowledge off of this and apply it to your own investing strategy. And as far as context goes, I am a 30-year-old single female with no dependents. The only thing I do have with me is my dog Jackson, who is adorable and does cost me a little bit of money, but nothing like having kids would do. And I've been growing this portfolio since about 2013, and as of right now, presently, I'm not investing any money into it other than the dividends that I am getting. So we're just reinvesting dividends for right now, and let's go ahead and jump into it. As far as my goals for 2022, I wanted to reach a $32,500 value overall in the portfolio. We did not hit that. I wanted to earn $1,200 in dividends for the year. I did not hit that. And I wanted to reach a $100 monthly average on my dividend income. And I did not hit that. We came pretty close, not with the portfolio value. The stock market just did not do very well this year. We came really close with my dividend yields though. And this is just my checklist that I can mark off along the way. My goals for 2023 are to again reach a $32,500 value in my portfolio. I want to earn $1,275 in dividends, and I'm hoping that I can reach a $105 average monthly dividend yield. So that's based off of a 12-month rolling period. As far as my long-term goals, we want to reach a $600,000 portfolio, earning about a 4% annual dividend return, and that would be about $2,000 monthly average, or $65.75 a day, and right now we're earning about $3.14 a day. So we've got a long ways to go, but that is where it's at. Let's go ahead and take a look at my overview of my portfolio. And I track this in a couple of different spreadsheets, just the way that kind of helps me work out my own. I have it broken down by different sectors based off of my target goals for them. So finance, I'm trying to keep that 25% of my portfolio. Tech and real estate, consumer staples, all about 15%. Utilities, 10%. Healthcare and energy, 5%. Telecommunications, 3%. Bonds and ETFs. Industrials and consumer discretionaries at 2%, and then materials at 1%. And that is just based off of my research and where I'm at as far as long-term investing strategy. So I have it broken down in my spreadsheet based off the different sectors to show me what my actual percentage is of the portfolio, and then I just reinvest based off of this, and this just automatically updates as the market updates. I have it set up so that my prices of the stocks are automatically updated with the market. There's a formula in Excel that you can do to do that, and then I just have everything added up in here. And so I'll know where I'll be reinvesting my money to try and rebalance and hit those targets as much as I can with my portfolio. And then I have it broken down by each month and the dividends that I earn basis of a sector. And this is again broken down in each one of those sector tabs that I have down at the bottom, so that I can track how much money each individual stock is making me dividends and each sector is making me dividends, which is how I can see which sector is making me the most dividend return, which would be real estate right here, followed by finance. And so that's going to impact my average dividend return. So we're just at like 3.96% return right there with that average monthly. And so this is how I track that information, and you can see how it varies month to month, quarter to quarter. For more information about the individual dividends that I'm earning, I am doing a monthly breakdown where you can see different income I'm making off of the different stocks, and that is with the quarterly totals added in there as well. Feel free to check out my entire playlist that breaks it down month by month for the last year and bless a little bit with that. To kind of give a little bit of context for 2022, my portfolio dropped from about $30,940 all the way down to $28,912. So about a 4.6% loss in the year, which is, nothing compared to the S&P 500 and the loss that it took this year. So we did really well, only lost about $2,000, and I'm happy with that. In total, I earned $1,121.50 from dividends, and that's just going off my rolling dividend every single month. I broke down my top dividend earners for you guys to see right here. So and this is based off of how much money they're going to potentially make me in the next year. So first company is New York Mortgage Trust, ticker symbol NYMT. We are earning $40 a quarter from them. NLY, which is in the real estate sector, $20.24 a quarter. AT&T, $10.82. Southern Company for $10.20 a quarter. Most of these are coming from that real estate sector. EFC is one of the ones. Ellington Financial Corporation is real estate as well, but it pays me monthly for the 55 shares that I own, so $8.25 a month. So it is a bigger payout than most of the other companies here, but this is just based off the initial payout. As far as rebalancing my portfolio, let's take a look at that real quick. Most of my rebalancing was focused on real estate. I broke it down by sectors here so you guys can kind of see that based off of the month. So most of my rebalancing went into ticker symbol NLY. And then as far as the other sectors, most of them were finance. And this is just a breakdown of all the ones that I dealt with, and different companies splitting their stocks and grandfathering in different companies and all those things. And then I just broke it down again by a list of how many I brought from each one. So we bought the most from NLY, 36 different shares. SIRI, we got 6 shares. BAC, we got 5 shares, all the way down. So we purchased 79 new shares of stock between, I think it's what, 19? Yeah, between 13 new companies. So not too shabby there. Before we jump into each individual structure, let's go ahead and take a look at my overall portfolio. And this is just based off of data that I'm pulling directly from my brokerage account, Ally. And this is the information that they're giving me. And it's just alphabetical here, is based off of the ticker symbol. And so this whole thing is posted up on my website, on my blog post. You can download it, there's no virus, I promise you, as a PDF if you'd really like to. If not, you can just take your time and scroll through and screenshot and do whatever you'd like to do with that information there. But this whole thing is posted there. It just breaks it down, top to bottom, what I've got, and highlights what companies are my biggest in my portfolio. But I went ahead and did that for you guys as well. So the top companies, the top companies in my portfolio are, of course, Apple, coming in at 7.19% of my portfolio. United Health Group, 5.5%. Costco at 4 3/4. Broadcom for 3.87%, and it just goes down there. So those are the top companies in my portfolio, and that's just an easy list for you to see, kind of see where you're doing as far as that goes. Now let's go ahead and take a look at each individual sector, starting with finance. I took out the dividends here just to make it easier to read, because that's a lot of numbers, so bear with me on this one. I have broken down each one of these individual sectors, also have target goals for the stock, for the companies inside of that sector. BAC is the top one in that. UNH is also there, and this is based off of the actual value that they are in my portfolio overall, based off of this sector. So I can see that heavily I need to reinvest some money and rebalance this just because of that. And if I don't own shares yet in the company, it's because they haven't reached my target price, or I just haven't had enough money or the ability to rebalance into them, and it just hasn't looked quite right. So that's what our working towards goal. Our goal is that we are working towards as far as rebalancing in finance sector. As far as tech, Apple, of course, is dominating that with over 50% of my tech sector, and that's what we're looking at as far as investing in the future with Apple and ticker symbol V, AVGO, Cisco, TXN goes down. As far as real estate, we are dominating right now with New York Mortgage Trust, ticker symbol NYMT, with that massive dividend of $40 every single quarter. So we are slowly working that number down to 15% and building up ticker symbol OHI, ticker symbol NLY, and ticker symbol O, just kind of making sure that this balance. And again, this breakdown shows the dividends and the payouts based off how many shares I have from each one of those, which again goes into that overview so I can track how much money I'm making in dividends from each company and kind of balance it that way. But that is my real estate sector. All these companies are good companies. I like them all, and we're just kind of working through investing into those. As far as consumer staples, Coca-Cola and Costco lead the way as far as breakdown. I really like Costco. It's a great company. Kraft Heinz, all of these are good companies that we're working for. I have it highlighted if they're below what my target, my ideal target balance would be for them, and if we're at a loss for them. But we're just working through that. As far as utilities, Southern Company makes up my biggest portion of that. Ticker symbol CNP comes in second with 27.6%. And again, we're just working on rebalancing those. Utilities is doing well. That's a very good market sector to invest in when the economy is not doing well, because what do we all need? Utilities, water, energy, power, all those things are what make up these companies. As far as healthcare, we have Johnson & Johnson coming in with my top one desired. Ticker symbol MRK, GSK, and AbbVie are also coming in there, but we slowly just working through those numbers and trying to make it as even as possible. As far as energy, another fantastic sector. It is up, I think it's up 50-60% over all of 2022. So huge gains with a lot of these companies here. Happy to see that. Still working on rebalancing those targets for each one of those companies. The biggest one in my portfolio right now is ticker symbol SU, followed by ticker symbol OKE. As far as telecommunications, it's a little bit narrower of a field. It hasn't done as well. My predominantly 95% of this is ticker symbol T, which is AT&T, and we're slowly working on getting ticker symbol SIRI, Siri, up there as well. And then as bonds and ETFs, I just threw this in one generic one just because I am investing in ETFs as far as debt bonds in the stock market, just because I don't want to go in depth with each individual bond that you could invest in. And so I'm just using the ticker symbol BNDX as my primary bond and ticker symbol TROW as my primary bond investment strategy. And those are down right now. The bonds are really low. Treasury bonds are not doing well right now. The market is tough. But yeah, that is my breakdown for this as far as investing. And then as far as industrials, we have it broken down again. CMI Cummins is one of the bigger companies that I have, $242 a share. And it makes up about 26% of this portfolio, of this sector of my portfolio. But yeah, the only company that I own right now that is not paying a dividend is BA, which is Boeing. Not sure if I'm going to keep them or not. I'm weighing them. They're not going to pay a dividend in any future, so I should nix them from my portfolio. But right now, they're staying with it until I figure out what I want to do. As far as consumer discretionaries, now this is not the staples like food, bread, water, the basics of what you need to survive. This is like the higher end, like, ooh, do I want to remodel my kitchen with Home Depot? Those are the types of things. And so this market, this sector is going to decrease when the economy is bad, whereas consumer staples is probably going to do better because you have to have those, and discretionary you don't. So this is what we're looking at as far as the breakdown. I have not invested a lot into individual stocks with them, just because if we remember, it's been up over my target goal with that, and so I haven't invested anything in consumer discretionary at all this year. And so that's why, just because it's not set up. I've got my goal percentage in my overall portfolio. And then the last sector that I have is materials, which is just 1% of my portfolio. We are doing very well with almost an even split between the three companies that I have right now, and just working through it with that. And yeah, So that wraps up the individual sectors of my portfolio. I own shares from 66 different companies, and I'm making over $1,000 a year now off of dividends, and we're hopeful that we are going to hit that $100 a month average dividend yield, and we're just going to continue to keep reinvesting those dividends that we earn over and over again. And I plan on continuing to do my monthly breakdowns of the dividend income that I earn and how I am reinvesting every single month. So if you would like to follow along on my journey, I would be more than happy to have you along. And I would love to hear what you're doing as far as your own investment strategies, and if it's similar or different from what I'm doing right now. So that's my portfolio and how I plan on rebalancing it this year. As a bonus, I know I talked about this in previous videos, but I wanted to just highlight the 4 swing trades that I made in 2022 and how they did. Most of these were the very beginning of the year when I was a little bit more easygoing with my money. The first one we did was ticker symbol GRAB for 15 shares. We made $2.08, and that's after 2 cents in fees, for a 2.44% return. The second one, also in January, is ticker symbol VVOS for 17 shares, and we lost $2.74 for a loss of 6.77%. Not that great. The third one, again in January, is ticker symbol WISH, Wish, with 25 shares. We made 73 cents for a 1.05% return. And then the one that I talked mostly about is a swing trade that I did with an IPO, an initial public offering, through BRCC, which is Black Rifle Coffee Company, for 2 shares. I bought them in February and sold them in April, so this was a longer swing trade. I made $31.34, just shy of doubling my money in essentially a month and a half. I think it was like 60 days. So a very good return on an IPO. And if you want to learn more about an IPO and how that whole process went for me, I have a video that breaks down what an IPO is and how that process worked with Black Rifle Coffee's IPO. I will catch you next time, guys.